Hey everyone, this is Kirk here again at Option Alpha. Just doing a quick video update for everyone tonight. It is Thursday after the close. So if you probably look like this after what we've seen, you're not alone. I think this is definitely reminiscent of what everyone's kind of feeling right now. Like, where did this rally come from? And why is it continuing to be so strong? I really don't have any hard, fast answers, probably like most people. I'm not going to say that it was in the cards the whole time because it really wasn't. And I think it's really taken a lot of people by surprise, myself included. But we're starting to see signs that things are turning. We've seen signs for a week, I guess. But more normally, the VIX starting to move up a little bit, even though the markets are starting to have some more resistance to the move higher. Today is or the last 3 days really has been a pretty good example of the market resisting this move higher, considering that it really hasn't gone anywhere in 3 days. We had a huge close lower yesterday. Today we closed higher and basically gave back everything we gained yesterday on the bear side. But more or less, we are pretty much where we're at. And we've seen a lot of choppiness. And so I'm going to go through some charts and some sentiment readings and indicators just to kind of get a feel for where we're at and how overextended we are. Again, not to say that we can't stay overextended, and I think that we're going to stay overextended until we're not, really. That's kind of the breaking point that I'm looking for, is that we're going to wait and see for a good solid break of this trend. Anything else right now is just going to be a slight pullback in which people are going to get into. So let's just jump straight to the sentiment indicators right now. And again, you can access all of this stuff directly through Option Alpha. There's a link on the homepage. People always email me after these videos and ask, how do I get all this stuff? Well, all this stuff I'm going to show you, stuff I look at all the time, and you can access it straight through the Option Alpha homepage right there on the dashboard. So this is just the market sentiment and advanced declines. You can see that the big thing here is that advanced declines or advancers are way, way, way outnumbering the decliners. And again, this is just really reminiscent of a very strong market right now. You can see about 84% of the NYSE and about 74% of the NASDAQ are advancing. That's only a quarter left that are declining. So there's a lot of movement in the market. Lots of new highs. That's the biggest thing right there. Lots of stocks breaking into new highs and continuing to do that day after day after day. At some point, investors are going to take profits short term here. We're going to see a pullback. We don't know when it is, but again, like I said, we're going to wait and see for that huge, dramatic. It's going to be very obvious when the break happens, and then the markets are going to be coming down. If we look at Barron's sentiment this week versus the last 3 weeks, you can see that's decisively moved towards the bullish region again. You can see that the bullish index here on the AAI has moved from 48 to 51, consensus bullish 71 to 72. It then, again, doesn't seem like it's too high, but this is actually really elevated. I mean, 3 weeks ago, the market was still in a bullish trend. So we're continuing to see people who are more and more bullish. They're buying into this rally and possibly buying into it late. If we go over to sentiment like put call ratios and volume ratios, you can see we're starting to get back down towards the areas that lead to a bullish extreme, both on put call ratios and on option buyer sentiment. We're starting to get back into that bullish extreme area. If you remember on past videos I sent out just for members, we were in this range even as the market started to rally. So that was the key, right? Is that we look at all these indicators, the market's rallying, it seems overbought, but we really didn't have the indicators that really said, yep, okay, yeah, it's starting to get really overbought now. These indicators didn't jump as high as we all thought they would initially. And then the other one I really like today is this one is from the Business Insider, and it's a compilation of all these indicators put together. So really a compilation of a bunch of different things. And you can see, again, we're starting to get back up towards that really bullish extreme in market sentiment. So don't be fooled by any of the news and any of the media and all that stuff. Again, trade what you see, trade what the indicators are showing you. If we actually get to the charts, like I'm going to switch over here to the S&P, and actually let me go back to the NDX. This is a great representation of just listening to the indicators. So I'm going to throw up a MACD here, and this is on the NDX. And you can see that actually, if we take a look at MACD, and what we usually use here at Option Alpha is taking a look at this black line crossing below the red line. So again, this black line here, it's got to cross below the red line on a sustained move for us to go bearish, right? Across above the red line is bullish, across below is bearish. So you can see that it actually crossed and made a bullish signal back here in late December. That's when you should have bought on the chart. That's when we should have really started aggressively selling puts. As the market continued to move higher, you can see we never really got that indicator. We got some good divergence, and that's continuing to show right now, is that we have very good divergence. The market is continuing to lose momentum as it crawls higher, and that's even more notable these last couple of days where you start to see bigger candles, bigger wicks. It's more indecision. The last 3-4 weeks, we've just seen the market march higher. Not much indecision, but now we start to see these taller candles and taller wicks showing some more indecision in the market. Now the key is here is that we actually never really got the downward bearish signal until just a couple days ago. About 2 days ago, we actually got that signal. Now, does it mean that's going to fall over and crash right away? No, of course, right? It's got to work its way through. But historically speaking, it's been a very good signal for the market to at least show a stop in the rise of the market or a slight decline. All the times recently where we've had some really good signals back even here in September, have started to show some really good, at least the market stopped rising and starting to fall over. So again, if we just listen to the indicators, nothing told us December through January that we needed to sell this rally. It was a strong rally, and it continues to be. But now signs are starting to show of weakness in the market, kind of a rolling over feature as we look at things. If we take a look at the SPX before we end here tonight real quick, the key here, I think, on the SPX is going to be this support level at 1350. Now, we are definitely above that level right now. We have to break the highs of May 2010. Have to break those levels before we can continue higher. I think if we do manage to break above there and hold, not just a little pop and drop, but manage to break above there and hold for a couple days, I think we could be well off to 1450 or 1425. That would be my first target, 1425, and then 1450 after that. But we are noticeably in a very strong area of resistance. The market has tried to break this area a couple times before in the past, about 5 or 6 times here. So just because it's up here right now doesn't mean that it's going to break this level. So we just have to watch it really close. I think this week is going to be a big week, obviously. If the market does start to really break lower, and I mean like a candle like this, a big, huge red candle, maybe 2.5% down day, then that's when we really get started on the downward trend. Okay, that's when we start really aggressively selling calls. We don't want to sell puts right now necessarily unless we're very far from the market, unless we have a lot of room for the market to go. But right now we want to see that trend change before we start to sell some calls and call spreads. The last thing we're going to look at here tonight, and I appreciate you guys sticking with me on this video, is a look at the VIX. Now, ironically enough, the last couple days have been really good days for the market, right? The last week, the market has continued higher. But notice how the VIX has started to move higher now. And again, this is really driving home the point that I've tried to make in videos and video tutorials, is that the VIX is a volatility measurement. It is just measuring volatility. It doesn't necessarily correlate with a down market. So the VIX can move higher as stocks continue to move higher. It just means that they're more volatile. And we've seen that over the last couple of days as stocks have swung back and forth about 1.5% today alone in the S&P futures. So the signal of the VIX moving higher, that's really good. I mean, that's good for option sellers like us. That makes premiums swell across the board. That allows us to get further away from the market and take in more money at the same time. So overall, I think the conditions are setting up very nicely to continue. What we have now is kind of a topping process in the market. It's going to take a little while to work through. But once we have that in place, I think it's going to be a really good opportunity to start getting really aggressively back into the market, start selling options pretty aggressively. I know I'm going to. I've been sitting on the sidelines with mostly in cash for a while now. But I think that as the market starts to roll over here, it's going to present a fabulous opportunity to start putting some money to work. So as always, I hope you guys enjoy these videos and add your comments. As always, let me know what you think and happy trading.